Hello there. Let's take a look at your lunchtime market news now. China and Hong Kong stocks rose broadly. They were led by healthcare and consumer shares as market sentiment improved after China cut key lending rates for the first time since October. This as authorities work to ease monetary policy to help further buffer the economy from the impact of the Sino-US trade war. Hong Kong's benchmark Hang Seng jumped 1.3%, while the Shanghai Composite Index it gained 0.4%, and Japan's Nikkei was up 0.22%. Wall Street stocks finished mostly flat. Sentiment was weakened by Moody's downgrade of the federal government's perfect sovereign credit rating. Moody's slashed the U.S. sovereign credit rating from AA1 to AAA after markets closed on Friday. It cited government's $36 trillion outstanding debt and interest. The S&P 500 gained 5.22 points or 0.1%, while the Nasdaq Composite Index gained 0.2%, and the Dow Jones Industrial average, it rose 0.32%. The all-share index is currently up 0.25%. It's sitting at 92,249. And when we look at our currencies, the rand is at 18 rands 05 to the dollar. It's sitting at 20 rands 30 against the euro and at 24 rands 11 to the pound. Let's look at your commodities. Gold at this hour is trading at $3,233 an ounce. Platinum, it's sitting at $1,007 an ounce, while Brent crude oil is also sitting at $65.44 a barrel. Martin Smith is the portfolio manager at Anchor Capital, and he joins me now to dissect the markets. Good afternoon, Martin. With the upcoming budget, it is the big talking point. We're all looking forward to it tomorrow, the 3.0. And considering all these other postponements, what specific fiscal measures or reforms do you think the market in particular will be focused on? Do you think there'll be any anticipated changes that could influence investor confidence?
I mean, it's a tricky one, right? Because it's post this VAT reversal story, which all of a sudden means you've got 75 billion rand that needs to be covered somewhere in the next 3 years. So where does that come from? And I think that's the big question, because you've got, again, a little bit of relief on the consumer side, but we probably need to see a little bit of a cut from the expenditure side from the government's perspective. So in a bit of a tricky kind of position. And I think we kind of find ourselves in a bit of an inflection point from a fiscal decision-making perspective. I think all the kind of easy kind of opportunities to cut where they can are kind of gone. And now it's quite difficult decision-making time because you've got to choose sometimes between a bit of politics or economics or whatever. So I think the government's got a bit of a balancing act there. And I think also from a growth perspective, we keep seeing that growth number being revised downwards. Now, from 1.9 at the last budget to about 1.5 now, the IMF have got us at about 1% growth in GDP for this next year. So it's probably closer to that number. So it's tricky. It's tricky with what they're going to do, and I think we'll have to see how it gets on.
I'll tell you what else is tricky is that visit by the President Cyril Ramaphosa visit to the U.S., obviously trying to iron out things and strengthen diplomatic ties with the U.S. President. What potential economic or investment opportunities do you think this will happen? There have been some skeptics who say that this will be a useless meeting. But do you think it could affect market sentiment, particularly towards South Africa, as well as the trade relations between South Africa and the US in the short and long term?
I mean, it's a good question. I think I'd love to be in that room and see what exactly goes on. And I think it will have to be a little bit of a wait and see approach to see if it is a meeting that's a non-event, or maybe there's something interesting that happens. I mean, there was an article now a few minutes ago. I still need to double check and see what it is. But on Bloomberg, it said that Starlink, which is obviously Elon Musk's kind of Wi-Fi business, has been seen to maybe be approved in South Africa, which it wasn't kind of previously. So that's an interesting kind of development insofar as what may or may not come from these meetings. So if that's step one, let's see what step 2 and 3 and 4 potentially are kind of after the meeting.
Yeah. Something else that's happening tomorrow, Martin, is the release of the inflation figures as well as retail sales. They're likely to be overshadowed by everything that's happening tomorrow. But when it comes to inflation in March, we saw that it went, it was about 2.9, or rather between 2.7 and 2.9. And we also saw that retail sales figures, they actually bounced up in February. What are you at Anchor Capital penciling in with regards to those numbers come tomorrow?
Yeah, so, I mean, retail, I think, is going to be interesting to see, just a kind of snapshot as to what kind of consumers are looking like. The big one, I think, is CPI, because of how it leads into potential rate cuts. So we think that you'll see that number trend kind of sideways, probably still at about 2.9%, so maybe a bit of a non-event. But it's going to lead very interestingly into kind of what the MPC and SAB does next week. We think there's going to be a 25 basis points cut. There has to be. We pencil in kind of 2 to 3 cuts for the year of 0.25%. And this will probably be the second one. Whether or not a third one comes later in the year, I don't know. But things are looking quite good from an inflationary perspective. Yeah. And I think especially the oil side of things is playing quite a key role insofar as keeping that kind of headline and kind of follow through core inflation number down.
Before I let you go, I'd like us to delve slightly into the results, company results that we saw today. We had Alexander Forbes. We also had, I think you said it's Nathan Limited when we spoke earlier. Let's start with Nathan Limited. They reported a 6% decline in revenue in their South Africa operations. They also saw a 32% drop in clients, also along a continuing loss. What strategies do you think the company could implement to improve their financial performance? And also, what does this tell us about the state of consumer payment behavior in the country?
Yeah, I mean, it's definitely an indication as to kind of, again, on the ground with the consumer. But I think also what we need to take into consideration with Newton is that obviously it's kind of out of the we buy cars transaction capital kind of stable, and they themselves have mentioned that their short-term prospects, including this result, may be a little bit affected by kind of a lot of the restructuring that they've been doing in the business and just getting things aligned and kind of battening down the hatches insofar as what that business is, how it's operating. And again, it's a bit of a spin out of that whole stable. So they've kind of cited that as a bit of a reason as well for kind of the not as good results as maybe the market was hoping for, is kind of shown by the share price decline. While they do say that their kind of medium to long-term prospects, once things are restructured and aligned and ready to go, I think they think they can do a lot better from that perspective. So that's definitely one to watch. But the share price, definitely, the action has been quite a bit down today. And the other one is Alexander Forbes, which obviously benefited nicely from the markets going up over the last 12 months. Look at just the trading statement, so we'll have to wait for the results there. But obviously benefiting from tailwinds from market movements. Yeah, of course, they're expecting between 10 and 20% in headline earnings per share, which is a measure of profit that we use here in South Africa. Martin, thank you so much for dissecting the markets for us. Martin is with Anchor Capital, and he's been our market commentator for today. That's all for your markets.